Angeline Ong, and welcome to Beat the Street, the show that gives you all the tradable news and data you need ahead of the Wall Street Open. Coming up, traders eye the Fed, jobs data, and yet more mega earnings. And Boeing postpones its 2024 outlook. Its CEO says the company has much to prove. Qualcomm investors eyeing those results for any comments on indicators of demand from the smartphone market and AI as well. Now, good afternoon. I'm Angeline Ong, and welcome to this edition of Beat the Street. Not long now before Wall Street starts trading, but first we've got some breaking news that's just trickled out in the last few minutes. The ADP, let's start with that. This is the ADP national employment number for January. We were looking out for 145,000. We got 107,000. That's a miss. However, the pace likely overstates the slowing labour market momentum. What's also in our sort of front view mirror is the employment wages number quarter on quarter and employment benefits as well. They are for the fourth quarter. For wages quarter on quarter 0.9%, and for benefits at 0.7%. Employment costs we were expecting 1%. We got 0.9%. So let's just have a quick look at Wall Street. Not much of a move to the needle there. That's the hourly chart. Let's get you a daily chart as well. What the traders are probably more concerned about is, of course, that Fed decision coming up, and also we've got quite a huge number of earnings that we have to get through yet, even though the big tech ones have already been done. Joining us now to talk about all that live from New York is Chris Vecchio from Tasty Live, part of IG Group. Chris, let's start off with the main set piece of the week, the Fed. What are we expecting to hear?
Angeline, well, the Federal Reserve isn't expected to do much of anything today. There's a 97% chance that the Fed keeps rates on hold, according to Fed Funds futures right now. The question is whether or not they tee up the possibility for a March rate cut. Those odds fell to their lowest level that we've seen since the end of November 2023, yesterday following the JOLTS job report. Now, they're moving a little bit back higher today following ADP. They're still sitting right around 40%. The big debate is whether or not the Fed has the ability to even suggest that the fight against inflation is wrapping up. And I think the answer is clearly yes. Today, the market's not pricing in much from the Fed because, quite frankly, I don't think the market needs to be afraid of the Fed. 1 month, 2 month, 3 month, 6 month annualized rates of core PCE have now fallen to or below 2% for several consecutive months. We are well on our way to getting back to the Fed's target in real time. And for a March rate cut to be teed up, they need to start planting those seeds now. So a cautiously optimistic tone I would expect to hear from Fed Chair Powell today. The economy is growing, the labor market's strong, inflation's coming down. It's the perfect scenario that I think Fed officials would have signed up for a year ago, and no one would have believed you if you said this was possible. Traders should not be worried about the Fed today. The data the rest of the week and moving forward, however, carries a great deal more importance.
Indeed, and we've also had quite a few organizations coming out with that soft landing, that term. Do you think the Fed is likely to also mirror that?
The Fed has told us previously that soft landing isn't their base case scenario because, quite frankly, their base case scenario is effectively no landing. And what I mean by no landing means the economy is not going to go into recession. If you have an outcome where the unemployment rate is still below 4.5%, inflation's back to target, and GDP is positive, that means the economy didn't have to land. A soft landing is a mild recession to defeat inflation. And that's clearly not necessary at this point in time. So soft landing, I hope it's not the Fed's base case scenario because I think that we want to see an economy still grow. I'm in the no landing camp right now.
And speaking of that, we've also got a huge number of earnings coming out this week. We've already seen the big tech companies, a lot of the focus being on the costs of AI rather than what AI can bring to the revenue table. Are we going to see this echoed in the weeks ahead?
Oh, absolutely. I mean, this started, a week or two ago when TSM released their earnings and juiced up the market. AMD, obviously, yesterday was disappointing when you took a look at the Google or the Microsoft results. the stock's reaction initially were for much weaker prices. Today's not that consequential of an earnings day. I think companies saw the schedule and said, we don't want to really get on top of the Fed. So tomorrow is the day that people really should be watching out for. I know Nova Nordisk reports this afternoon, but we care more about Apple, Amazon. We care more about Meta, even Merck to an extent. And so tomorrow's going to be the really important day this week. If we can get on the other side of Apple, Amazon, and Meta, and this is a market that's still holding up, I think that's good news for the week ahead. But unfortunately, off to a bad start. The NASDAQ overnight, obviously not looking too pretty following those Microsoft and Google results.
Thanks very much, Chris Vecchio there from Tasty Live in New York. Now, ahead of all that, and of course the Fed, IG's Axel Rudolph has been looking at where the action is in the FX market.
Well, Angeline, today I thought I'd have a look at dollar yen, simply because ahead of this evening's Fed meeting, we could see some volatility enter this currency pair as the Bank of Japan is increasingly hinting at hiking its rates at some stage this year. This would be the first rate hike, obviously, since 2007. And you can see here on the daily chart that we've been trading sideways and treading water over the last couple of weeks so far, and that we are basically trading between last week's low at 146 yen and 65 sen and the previous week's high at 148 yen and 80 sen. And I wouldn't be surprised if after this evening's Fed meeting we were going to break out of that sideways trading range. If we were to continue to advance and rise above 148.80, I think the next upside target is the psychological 150 mark. But if there were to be a surprise and if the US dollar were to slide to below 146.65, we could retest perhaps the orange line here, the 55-day simply moving average around 45.74. But I don't think that we would in that case slip as far as the red line here, the 200-day simply moving average 144.49. But probably just dip lower and then continue our advanced medium term.
Now, another interesting stock to watch, of course, Microsoft. Just checking in on the tech stocks after their earnings overnight. Just showing you Microsoft here because it is losing ground after forecasting rising costs to develop new AI features that offset a quarterly result beat. Just showing you the hourly chart because this is where the action is. As you can see there, that's what happened UK time 9 o'clock, and then as you can see 10, 11 and so forth. But it's looking like the cost is more of a concern at the moment for investors. Also checking in on Alphabet because that is another all-session stock. And look at that move there. Let's show you the hourly chart as well. And as you can see there you go. That's the move after the company reported that holiday season advertising sales came in below expectations, and also it projected higher spending this year on items like servers to power AI. And also keeping an eye on semiconductor stocks through because of course we had AMD as well. AMD disappointing current quarter revenue forecast, and all this of course added to those worries already inspired by Microsoft and also the concerns over costs, as I mentioned earlier. Just taking a look at AMD for you, if I may, because AMD also all sessions on the IG platform. There you have that reaction. Now this is the hourly chart, and if I switch that to the daily chart, you can see that's what we're expecting at the moment. But of course all the action can be seen in the hourly chart here for you. AMD saying as well that this is quite a difficult time, and what is interesting is that AMD's update follows Intel's bleak first quarter revenue outlook that was delivered earlier in the week. Let's just get a sense of how all this is being digested by tech investors and also by those that have leverage or can change the needle in the tech space. Let's look at Nvidia, for example, which is also all sessions. This is the hourly chart for you after those tech earnings. Micron Technology, also another all sessions stock on the IG platform. There we go, Micron Technology. all sessions. And what is key is that they all seem to be suggesting a lower start when the cash session opens. Now, Boeing is one of the key movers for us. Let's just have a look at the top lines for you. Boeing's Q4 net income, that's what it did. No financial or delivery forecast for 2024. Investors pouncing rather on that guidance, and Boeing saying that it has much to prove to regain confidence of regulators and customers as well after a mid-air cabin panel blowout of a 737 MAX aircraft. The CEO says that the plane maker will go slow as it faces a serious challenge. And just looking at the shares for you here, Boeing all sessions on the IG platform. This is the hourly chart. As you can see, it's switched directions now, might I add. That's showing you the daily chart there for you. Now, one other thing that we've been watching for you as well will be Qualcomm. Qualcomm is out after the close, and investors will be watching to see what it says about any sort of demand forecasts from the smartphone industry, but also any commentary on AI as well. And just checking in on oil prices for you too, because we've seen so much volatility in this space. That's a picture of US crude. Analysts have cut their oil price forecast for a third straight month. Meanwhile, Saudi Arabia is to cut a planned maximum capacity to 12 million barrels. Many economists surveyed and also analysts, let's bring up Brent for you, Brent crude, there you go on the IG platform, have said, so these economists and analysts that have been polled have said that Brent and WTI will average around 81 and 82.56. And this is the consensus back in December, down from this consensus in December. US crude, that CLC1 forecast for 2024, also lowered to 77.26 from 78.84 last month. Now, before we go, a quick look at how the market is faring ahead of the Fed, checking in on Wall Street for you, and it's looking like a cautious open. Here's the hourly chart for you. It is slowly and cautiously climbing slightly higher, but not by much, it has to be said. And that's it for this edition of Beat the Street, the show that follows the trading action for you, helping you position yourself ahead of the opening bell. I'm Angeline Ong, and this is IGTV.